Pepsi has seen huge gains in profitability after purchasing the new Tesla Semi. But this may be too late as Tesla's stock continues to hit all-time lows. Is the Semi enough to save Tesla, or is it finally time to jump ship? Find out in today's video. You're watching Trade Daily. Like and subscribe for more daily Tesla stock market news. PepsiCo plans to roll out 100 heavy-duty Tesla semis in 2023, when it will start using the electric trucks to make deliveries to customers like Walmart and Kroger, the soda maker's top fleet official told Reuters on Friday. PepsiCo Inc., which ordered the big trucks in 2017, is purchasing them outright and is also upgrading its plants, including installing 4 750-kilowatt Tesla Inc. charging stalls at both its Modesto and Sacramento locations in California. PepsiCo Vice President Mike O'Connell said in an interview, a $15.4 million state grant and $40,000 federal subsidy per vehicle helps offset part of the costs. It's a great starting point to electrify, said O'Connell, who oversees the company's fleet of vehicles. Like any early technology, the incentives help us build out the program, he said, adding that there were lots of development and infrastructure costs. PepsiCo is the first company to experiment with the battery-powered Tesla semis as a way of cutting its environmental impact. United Parcel Service Inc. and food delivery company Cisco Corp. have also reserved the trucks, while retailer Walmart Inc. is testing alternatives. PepsiCo's plans to use the semis have been reported, but O'Connell provided new details on how the company is using them and its timeline for deploying them. Tesla chief executive Elon Musk initially said the trucks would be in production by 2019, but that was delayed due to battery constraints. PepsiCo said it plans to deploy 15 trucks from Modesto and 21 from Sacramento. It is unclear where the others will be based, but O'Connell said the firm is targeting rolling out the semis in the central United States next, and then the East Coast. The company's Frito-Lay division sells lightweight food products, making it a good candidate for electric trucks, which have heavy batteries that could limit cargo capacity. The semis can haul Frito-Lay food products for around 425 miles, 684 km, but for heavier loads of sodas, the trucks will do shorter trips of around 100 miles, 160 km, O'Connell said. Driving a trailer full of chips around is not the most intense, tough ask, said Oliver Dixon, senior analyst at consultancy Guidehouse. I still believe that Tesla has an awful lot to prove to the broader commercial vehicle marketplace, Dixon said, citing Tesla's unwillingness to offer information on payload and pricing. PepsiCo has earmarked some of the trucks planned for the Sacramento location to make deliveries to Walmart and grocers such as Kroger Co. and Albertsons Cost Inc. The trucks at the Modesto Frito-Lay plant have just gone to PepsiCo distribution centers, O'Connell said. All of the semis going to PepsiCo will have a 500-mile, 805 km range. O'Connell added that he is not aware of when Tesla will start deploying 300-mile, 480 km trucks. When Tesla starts building them, PepsiCo will rotate those up into its fleet, he said. PepsiCo declined to share details on the price of the trucks, a figure that Tesla has kept quiet. Competing vehicles sell for $230,000 to $240,000, said Mark Barrow of consulting firm Plant Morin. He added that the 500-mile range Tesla Semi could be priced higher because its 1,000 kilowatt-hour kWh battery pack is about twice the size of many of its rivals. We keep the trucks for 1 million miles, 7 years, O'Connell said. The operating costs over time will pay back. The Gatorade maker declined to share specifics on the weight of the trucks, another closely guarded secret by Tesla. He said Tesla did not help pay for the truck's megachargers, but provided design and engineering services for the facilities, which come with solar and battery storage systems. O'Connell said that a 425-mile trip carrying Frito-Lay products brings the semi's battery down to roughly 20%, and recharging it takes around 35 to 45 minutes. Tesla has been a monster stock over much of its history, especially from its stratospheric run from mid-2019 to late 2021. But in 2022, Tesla stock has been a big loser, on track to plunge 57% as of December 16. That would easily surpass 2016's 11% fall, the only other annual decline since Tesla stock came public in 2010. The sell-off has intensified, with the EV giant losing more than half its value since late September. On Friday, Tesla stock skidded 4.7% to a fresh 2-year low. The 16.1% weekly decline was the worst since the COVID crash of March 2020. Here are some major headwinds facing Tesla stock, from Elon Musk's Twitter circus to Tesla demand concerns. Tesla stock annual performance, Tesla demand. A big Shanghai production increase and a weak Chinese and global economy are all raising concerns about demand even with deliveries set to hit record highs in Q4. Tesla cut prices in China in late October and has announced a slew of incentives to clear out inventory, but wait times are essentially at zero. There are consistent reports of Shanghai production cuts, though Tesla has denied them. Tesla may be betting on a big quarter for European sales, but that could draw down backlogs heading into 2023. On January 1, EV subsidies end in China and Norway, with Germany cutting subsidies substantially. Sweden has just ended its EV subsidies while the UK is ending its program. Tesla is offering free supercharger kilometers in a year-end European push, along with some temporary UK price cuts. That comes as China's EV competition intensifies, with more and more models from the likes of BYD, NIO, Li Auto, and more taking on Tesla's aging Model 3 and Model Y. Europe's EV market also is getting more crowded. On the flip side, Tesla will be eligible for U.S. tax credits of up to $7,500 per vehicle. Tesla still faces far less competition in its home market than in Europe and China. With potential buyers holding off on purchases or deliveries, Tesla is offering $3,750 off Model 3 and Model Y deliveries before year-end, along with 10,000 free supercharger miles. Beyond Tesla, there are concerns about EV demand around the world amid a weak global economy and high EV prices that could slow the adoption of electric vehicles generally in the coming years. Tesla CEO Elon Musk has owned Twitter for less than 2 months but already seems like ages. He's slashed staff by half, with many other employees exiting. Advertising revenue is plunging. Musk's tweets have become increasingly partisan, while recently suspending several reporters' accounts. All of that has raised concern that Musk is damaging his image. Even longtime Tesla bulls fear that is tarnishing Tesla's brand. Musk has sold several batches of Tesla stock this year, including $3.6 billion worth over December 12-14. He cited Twitter costs on some of those share sales. Tesla stock follows EV rivals. Aggressive growth. Tesla stock is not doing well. But it's not alone. Aggressive stocks have had a terrible 2022. Tesla's EV rivals in particular have struggled, including NIO stock, Li Auto, Rivian, and BYD. Rivian is not far from a record low, but BYD, NIO, and Li stocks are trending higher. More broadly, a bear market has ruled for most of the year. While the major indexes have rebounded from October lows, the S&P 500 and Nasdaq Composite are back below their 50-day moving averages, down significantly for the year. And while this might be disappointing news for some, Cathie Wood recently made a market-breaking purchase of Tesla stock. Some would say this was more insane than Elon buying Twitter, but Cathie Wood is sticking to her guns. We break down everything you need to know in this video right here. Thanks for watching this video, and remember, this is news and entertainment, not investment advice.